Australia's always been, it's always lagged behind and fallen behind, and has continued to fall behind.
Generally speaking, the stock market is now 15%.
I think you will see, between now and Christmas, I think it's fair to say that, talk soon, here we are, 24th of September, 3 months away from Christmas. I think we'll see a 0.5 to 0.7% before Christmas decrease in rates. Well, that's interesting, because the data you pull from, from CoreLogic, RP data, Reuters, not only just here but also West, and I'll talk West, I'll talk about the United States, is that that particular interest rate obviously will assist the homeowner. The investor market, what has happened in most cycles like that is that people have waited and the bottom's passed and they've missed the bottom. I think we're in a market right now where, if you're looking at the investment market for a property in Australia, or the United States for a moment, is probably right now, and between now and say February is probably the best window, I would say, for a long, long time. So I don't think you're going to see, when there's not a lot of exchange in the market, the prices are fairly stable. The demand at the moment, the demand for the mums and dads family homes at the moment, that particular side of the market is doing extremely well. People trading up from 900 to 1.2 to say 2 million, 2, 3, 4 bedroom homes on the outer. That particular pocket is trading extremely well. The investor market has pulled right back, particularly in Victoria and New South Wales. Interest rates can't be justified at the moment. Trouble getting borrowings, the servicing cost, the ICR, the interest coverage ratio, and land tax. So the investor market is still sitting on their hands. And part of that is, well, why would I go and spend $1 million on investment property? The net outcome might be 4%. Yeah, I'm going to get capital growth, but I can park the money at 5.5 to 5.6 to nearly 6%, depending on the amount of capital you've got. So it's at a window. So the only market that I think will do well at the moment is that family home, that market, the owner-occupier. What we're seeing in the commercial side is at all-time low, worst I've ever seen. Commercial property now, in some pockets, the average data came out in the weekend, which I think, and that's CBD, a 24% decrease on commercial valuations. That comes from the valuation department, CBR Resettles, Colliers, Knight Frank, and they're seeing a 24%, and that data's then recorded through to RP data. So the only area in the commercial space or business space is industrial. Industrial is doing extremely well. Office is terrible. Rural is stabilised. That's at threat because of the windfall tax. And the only areas that are doing well are owner-occupied. But investment stock is not moving as quick. The ambivalence and the uncertainty, waiting to see what happens with the US election, what happens with Australian election, and what happens with... And the government's got a real focus on the investment sector, particularly real estate being the backbone of the economy. The government's got a real focus on how they can get their hands on or derive some income from $3.7 trillion in super.